Good afternoon, traders. This is Cholly with RJO Futures in Chicago, coming to you on Friday afternoon, January 11th, with your grain market wrap-up. We had a big quarterly crop report this morning, and we also had crop production, supply and demand, so there was a lot of information to sift through today. And we also had a new release time for this report. From now on, the USDA is going to release their crop reports at 11 a.m. Central Standard Time. So the market's open, and these reports come out, and people have very little time to react. So oftentimes we're going to see, a knee-jerk reaction one way, and then as they get time to sift through these numbers, the market starts to correct itself and perhaps move the other way. Today, the grains were all trading sharply lower as the report came out. We had a huge reversal. Everything shot up initially. Soybeans ended the day lower. Soybeans down about 4.5 cents or so on the close. Wheat up 13 cents on the close, and corn about 10 3/4. Corn and wheat and beans, everything off their highs, but we saw a positive close in the corn and wheat, mainly because we had lower stock numbers there, lower winter acres in the wheat. So let's get a little deeper into these numbers real quick. Start with the corn. We had a little better production than what we thought. We had 10.7 billion bushels. We saw the average yield about 123.5 bushels per acre. That also was about a bushel per acre better than we estimated, and the harvested acres were also a little better. We were looking for about 86.8 million acres. We got 87.4. Soybeans, we saw a little better production there also, a little over 3 billion bushels. Yield was about 39.5. That was in line with expectations, and harvested acres were a little better than expected. So we have a little bit better production than what the market was looking for, but the bottom line is what we have in stock. So we see in the corn, we had 8.3 billion bushels. We're looking for about 8.2. In the soybeans, we had a little under we had 1.9 billion bushels there, and we're looking for a little over or just under 2 billion. In the wheat, we had 1.66, and we're looking for 1.674. But all these numbers were a little less than what we had actually priced in. And what that tells you is that even though we had a little bit more production than what we thought, we still ended up with less stocks than what we had priced in. That means we had greater demand. So the more bullish number of all, though, is that the ending stocks, the grain that we had left over from the previous crop year was surprisingly lower. In the corn, it was 602 million bushels. They were looking for 667. Soybeans was 135. That was in line. They were looking for 135. But the wheat was at 716, and they were looking for 743. So what it tells us, again, is that even last year, when prices were much higher, demand was better than what we anticipated. So one thing that I really want to point out that I talk about all the time is those old crop, new crop spreads. Corn, July-December spread. That's July's the old crop, this is the new crop. We haven't planted that yet. And something that I like to stress also is that the grain market's very good at alerting users and producers when there's a shortage. The price goes up, demand backs off, production increases. So we're going to see a lot of acres this spring. There's numbers as high as 99 million acres of corn estimated to be planted. So this old crop, new crop spread is going to work very good. What it's telling us is that the old crop is a tight supply. The new crop is still unknown, but we anticipate a lot of acres. So we had some big moves there today. In the corn, it was up 13 cents on the close. That spread's now just under $1.20. In the soybeans, it was up 8 cents. It's about 93.25 cents now. So that's something to keep an eye on. Another one that isn't really moving yet, I think, is very attractive. Something that you should at least keep an eye on, something we should talk about, is the wheat and corn spread. That's down below 50 cents. Wheat's a premium to corn. Normally, when we see the price of wheat and corn get this close, we see demand for feed usage shift from corn to wheat. We're also starting to see more interest in U.S. wheat, as it is now about the same price as everybody else's wheat all over the world. There's some concern about the winter wheat crop in the Ukraine and Russia. There's some concern about the wheat crop in Australia. And again, we're seeing demand start to shift to the U.S. So that is something that I think may be the next mover. Please call if you'd like to discuss some strategies on that. In the meantime, please feel free. Give me a call, shoot me an email, something. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.